Thank you everyone for attending this webinar. And today we're going to discuss the benefits of the arrival of social trading, what it can offer traders like yourselves, and also, since not everything is always good about social trading, we will also discuss some of the challenges as well as ways for you to stay safe when facing those challenges. I generally like to do these webinars in an interactive way. So if there's any point at which you have a question or you have a remark, feel free to type into the chat, and I will be very pleased to hopefully address your issue at that point. If it's not adequate or I'm going to take it up later in the presentation, then of course I will defer to a later point. But please do not refrain from asking questions or even challenging what I say, because it's always a constructive exchange that makes things better for everyone. Okay. So, today we're going to cover 4 topics. What social in general means for the world, really, and for traders in particular. We will then look at the different solutions for social trading that are currently in the market, which in our view have some challenges. And then we will look at some alternative models, like the one that Darwinex sponsors, that in our view addresses those challenges, and that we would like to tell you about it and address any questions you might have. So, well, the world has gone social. You wouldn't believe it. For someone who's kind of close to 40 like myself, it's amazing how much things have changed in the last 10 years. 10 years ago, it's incredible to think that neither Facebook, nor Pinterest, nor Twitter, nor Google Plus actually even existed. I don't even know about YouTube, but it must have been not too great by then. And it's really commonplace to anyone below the age of 25 today. So the growth of this has been exponential. And the big change that this implies is that social gives everyone a voice. And the question really is, where does this lead, both for society at large and for traders like you? Well, the fact what social has done is that information sharing has changed forever. When you probably went to school, what happened was you listened to the teacher. When you watched CNBC, you would be listening to the expert. And generally, there was one-to-many communication flow where there was somebody, like in this case, for instance, myself, who was the, so to say, the speaker or the expert whose voice had to be listened to. The big change that social brings is the possibility of peer-to-peer information exchange. And what you have here is a very nice visualization which shows the interactions between a network of traders with each other. And you can see, well, that there are some central nodes in the middle, presumably traders who have more credibility with the broader community, that have more connections to everyone else. And there are, towards the outside, there are nodes of people who presumably are just on a more passive or listener role, who then choose who they interact with. But the point is that this is not a hub and spoke model where everyone is listening to one expert anymore. Everybody is actually listening to everyone else. And this really changes the rules of the game. The point for traders is that the information flows on demand. So for instance, if you're actually interested in learning about the pound yen, well, you can find in places like FX Street, people who have more activity in the pound yen and listen only to those. Information flows granularly, so you can choose who to listen to and who not to. And it flows both ways. You can speak to the other person in addition to just listening. And this is a great opportunity, as you would expect. So the first thing that you can do, for sure, is exchange information with anyone who might be of interest to you. That information might be more general, or you might even go as far as kind of making, say, Twitter buddies with whom you exchange trade ideas. You comment the news that is coming along and think what you should do next, which can help both you and your buddy. And it goes as far, the other point of the internet is that you could really make a living from home without actually exiting. If you really are a very good trader, and you find people who genuinely help you trade better, then nothing stops you from making trading, which presumably was the part-time passion, your day-to-day livelihood. And that's something which, again, didn't exist 10 to 15 years ago. Now, of course, with all opportunities come challenges. The first challenge, and one which we will talk about at quite some length today, is protecting intellectual property. And this is, I can't stress how important this is. Now, if you want to be a good, successful trader, very likely you will have to spend thousands of hours in front of your screen, working on your strategy and making sure through trial and error that you arrive at something which actually works and produces long-term consistent profits. And once you have put in all that work into it, the last thing you want is for anyone to free ride on your ideas. Once, for one, because it's not nice. And for another, it's because someone who steals your idea and has more capital than you might actually profit from your strategy and leave you out of it without you being able to do anything about it once they have stolen your intellectual property. The other point, of course, is cutting through the noise. There are 7 billion people on Earth, 2 billion of which already have internet connection. And, as you know, Facebook is free, Twitter is free, Gmail is free, it's, WordPress is free. Anyone can tell his opinion to the world, which is fine. The only issue being that, well, you might not be as interested in everyone's opinion as in, say, an expert's opinion. And last but not least, as we will discuss today, social trading, the fact that you exchange information which has to do with investments might have legal implications. For instance, whenever you're saying, I think we should now go long the euro-dollar, in some jurisdictions, such as in the UK, if you're getting paid for saying that, you would be engaging in the provision of investment advice, which is a regulated activity, and you might be in trouble if you don't hold the permissions to be able to provide such investment advice. Similarly, if you are as a so-called trade leader in a mirror trading service, for instance, let's say Zulu Trade, which is one of the most popular ones, again, if people automatically replicate your trading, then in some jurisdictions, and I encourage you to check for your own, this will be considered the activity of managing investments, which again is a regulated activity and will require you to carry some permission and also make you liable for legal prosecution if you don't. So don't take this lightly, because it's not just fun that we're talking about here. Now, the other part of people who's involved here is, both active traders who want to make their own decisions, but at times you might choose to say, well, instead of trading myself, I might want to listen or actually even copy someone who is an expert. And that is a great opportunity for investors, because the arrival of the internet has created millions of talents who are now trading the markets, much more than, say, 15 years ago, where only bank employees traded. And presumably there's a lot of talent out there which hasn't really been discovered, and it's your opportunity and their opportunity to profit from each other by backing their strategies with capital. So that's a great opportunity for investors who, again, have their own challenges. Of course, 99.9% of the people who claim to be great traders aren't actually as great as they think they are, and only 0.1% of them is. And the question is, how does an investor find the needle in that haystack, which is a challenge we'll come back to today as well. And of course, unfortunately, the internet is also ripe with scams where people just promise you, 10,000% of return. Some people are, greedy or maybe ignorant enough to wire their money to those places, and all sorts of things can happen to them. The first of them being that the money disappears and is never heard of again. Or maybe they're just sending it to back one of these 99.9% of bluff traders, and they end up losing it anyway. So to sum it all, if you're smart about using social, it is a great opportunity, but you have to be smart about it, because if you don't, the chances are you will fall short of your expectations. So how to profit about the social opportunities? I think there are 3 rules which sound like common sense. Unfortunately, not everyone applies his own judgment. So the first point is to think independently. So try to form your own opinion, what it is that's being told to you, and use your own judgment to reach your goal. Do not, and I repeat, do not trust all these so-called experts who claim to have the truth. And I'll give you a few examples of just why that is not credible, and you should stay well away from it. The second point is, and this is by far the most useful tool, is to question the incentives of everyone involved in a social trading environment. And we'll go back in a second to that. The answer you have to provide before you choose a provider is, what do all the others involved in it get out of it? And last but not least, analyze what people do, not what they say, because normally people do something and say something different to what they do. And I'll come back to that as well in a second. Using those three will keep you safe and help you profit socially. Fail any of those three, and chances are, as I said, you're in trouble. So let's go for the social trading review, applying the toolkit that I just described. So the first thing you should think about is what social trading can do for you. And there are really broadly five ideas which social trading can do for you. The first of all is just plainly information exchange. I can meet other traders. Trading is a lonely job. It actually helps to be in contact with others who share my passion for trading. And there are good things that can come out of it. One of those good things, as you deepen in that information exchange, is that you can formulate trade ideas. You exchange those ideas, such as, I'm thinking of going along the euro dollar. What do you think? Yeah, I think there's a resistance at this level. Let's go for it. A more passive approach to it might be, if you find people who you generally think are good, you could actually think of, so to say, copying his trades, which moves you away from an active trading role towards a more passive investor role. But of course, when you copy trades individually, you're still exercising your own judgment as to whether you should copy any of the individual trades or not. Maybe you find someone who you think is really good, and you might go one step further, and you might actually choose to mirror the trades of that someone, who de facto then becomes your investment manager. You can do this in mirror trading sites who do this across brokers, or you might do it in a PAM account within a broker. And if you've been around, if you want FX copy, so we'll come back to FX copy in a second. Let's just wait for it for a second. And the last step, of course, which can be an interesting one, if you have been trading for long enough, then social trading can be a source of revenues for you. So if you, let's say, the best example is when you're making a good percentage return on your own capital, you're making, say, 30% on your own capital, which is, say, 50,000 euros for 4 to 5 years in a row. Well, there's an opportunity if you allow people to mirror trade your trades. And if you make profits on everyone's money, then you could participate in the profits that everyone is making. And thus you earn a living, not just on your own money, but also on everybody else's money. Now, before I started this, I said we should pay attention to all the incentives of everyone involved. So it is very, very, very important to think of who is promoting the social trading. And well, if we're talking about general information exchange, there are plenty of trading groups in LinkedIn where people exchange information on a more general basis. Twitter has become a very, very popular tool with traders who choose to exchange ideas or interpretations of the market. And then there are various mirror copy trading sites. Some of them make their own money by getting paid by brokers for introducing customers to those brokers. So for instance, if you go to MyFXbook, they have quite a popular product called AutoTrade, and there's others like FXstat, to name a few, who do that. So you can go there, and then they advertise trade leaders. If you want to copy trade or mirror trade one of those trade leaders, then you can go to MyFXbook, open a mirror trading account, and then MyFXbook will get paid either on the advertising that the broker has done on their site, or on the volumes that the traders introduced by MyFX are making. If we go down this line, there are other models which are sponsored by their own broker. So eToro has become a very famous broker for copy trading. At eToro, you can go in and copy the trades by some of the more popular trade leaders on eToro. Similarly, there are platforms like Tradency who white label their model to different brokers, like, for instance, FXCM or AvaTrade and many others. And there, what you're doing is all the traders who are on all the brokers that offer Tradency can copy or mirror trade all the other traders who are on, say, Tradency. And possibly the most famous of all is ZuluTrade, which is, again, a site that's not a broker directly, but introduces people to open ZuluTrade accounts with different brokers, and they get paid, again, for the volume that those introduced people do. So we're now going to try to understand what, say, MyFXbook or ZuluTrade or Tradency or eToro gets out of stuff. And the important thing for you to think about, depending on what you want. So if you want to copy someone who's good, you should bear in mind what they are thinking before you give them your trust. And that's the important thing about today's world. So first point about information exchange, the first challenge, as I mentioned before, is how to cut the noise. Now, these days, everyone has a right to speak. So all the traders on all these sites will be talking about what they are doing and how good they are and how much profit they are achieving. Now, obviously, not everyone is profitable, and the people who are the most profitable are not necessarily the ones that speak the most. So the challenge really is to find who is worth listening to in this whole noise, and just paying attention to the ones that actually help you make profits, because ultimately that's what you want. You don't want anything else. So, and the best way to rule out bullshit from actual expertise is the people who generally are good, they publish their own track records, and the track records speak for them. So we're saying, close this trade for 900 pips on Twitter, and they publish that on Twitter 15 times a day. Well, always ask that guy to publish his track record in an independent site. So for instance, what we do here at Darwinex is we have a leaderboard where people can publish their track record for everyone to see. Since we are independent from the trade leader and they are submitting the trades real time, you can come to the site and actually check whether the evolution of the balance of the trader actually is what he says it is, and you can see each of the trades on the trading journal there. So that way you can make sure that people are not lying to you, which is unfortunately something that people have a tendency to do. So always, before you even choose of kind of social trading with someone or exchange ideas with them, make sure you know if they're good if they are as good as they say they are. So the second point, and this is one which people ignore a lot, is that in the age of the internet, you are exchanging information and people are watching you as you do so. So Big Brother is watching you. Whenever you're saying, I'm thinking of going long the euro-dollar, and you're putting that on a tweet and you're tweeting with your buddies, then Twitter has something called the Firehose API, which you can check here. And that API allows very smart people to filter through all the messaging that goes on in Twitter and look for trends that provide them with interesting trading ideas. For instance, one such company who does that, Filters for Finance, is FSY. And I know them. These guys are pretty good at what they do. And what they do is they analyze social market data. That is, they filter through what everyone is saying at the same time in Twitter, in real time, and they market the sentiment out of that. Say, they monitor how many people are saying euro-dollar long, and they will inform hedge funds of who's doing that at the same time, so that the hedge funds who pay for that can then trade maybe against or for the general sentiment. So Big Brother is watching you. And one of the possibilities that makes possible is, for instance, setting up a hedge fund such as Cayman Atlantic, which I'll show you as well. again, set up by a very bright guy who has built a track record that is built on the basis of trading on changes in the Twitter market sentiment. And he's making a pretty substantial return for the last couple of years on a risk-adjusted basis. And really, this is, he's smart to do so, because people should know that if you don't know what the product is, then you are the product. In that way, basically think back to all the effort you've put into developing your strategy, and how do you know whether the accounts are genuine? That's a very good question. As I said, you would always want an independent third party to certify the track record for you. So as a general rule, anyone who markets his own expertise is not credible, because obviously you have a vested interest in saying that I am the best trader in the world, follow me. And by doing that, you're not going to be credible. But if someone other than you does so, for instance, in this case, a company that I'm the CEO of is DarwinX, you can know that these accounts are genuine because, for instance, we have nothing to do. We are completely independent from this user, ForexBow, and he is reporting via his broker, without his intervention, real time, the trades that he is taking. So whenever he tells us that he's opened a US dollar Swiss, like a cable trade like here, we will find out the very moment that he has opened it. So he cannot backforge or fake the track record. So you can know that this is genuine if you believe that we're not lying. And why would we lie? Because we're independent from the trader. You could know that this is a genuine track record, and it's a pretty good one as well. Does that answer your question? Okay. But important point to take away is exactly, know that people are watching you. When you make use of one of these free services like Twitter, nothing, and I repeat, nothing is free in this life other than maybe the love of your parents, if you're lucky, but nothing else. So just always ask about the incentives. And the last, but not, the most glaring and obvious example of this is free social trading. So free social trading is so to say, okay, I am a very good trader, and I just happen to share my trade ideas because I love the world, and I give that away for nothing to the people who are listening. And that's a bit like saying, well, from the point of view of a follower, well, I've got this car, and you've got a car too. Since we both have a car, why don't we social share it? You get to drive mine, and I get to drive yours. In other words, the best trader in the world has had a trade idea, and the worst trader in the world has had a trade idea. And because both are traders, then according to social trading, all they do is share that trade idea. And unfortunately, that's just not how the world works. And that's something that you should really know. So if there's no payment involved, if the guy with the shitty car or the shitty trade is not paying anything to the guy with the fantastic car or the fantastic trade idea, then something is wrong. Because why? And this is the question. So if you owned a Ferrari trade, why would you give it away for free to anyone? You would never, I repeat, never give away your Ferrari for free to anyone other than maybe your father. And that's because there's no economics involved. So be very, very, very careful of free social trading, because there's no such thing as free social trading. And to understand where this is coming from, I go back to my statement of pay attention to the incentives of everyone that's involved in the social trade. So let's start from the point of view of a copy trader who wants to make a profit. So he's basically saying, and when the discount by 50, well, I'll come back to that. It's a good question, but I'll come back to that. Hopefully I'll be able to answer that. So the copy trader wants a profit, and he's basically going to a social trading site and saying, I want either, so to copy trade, maybe on eToro, or mirror trade on, say, Zulu Trade, strategies that win. And On the other hand of the equation, we have a trade leader who wants to make more money. The level of experience based. I don't really. So the level of experience based on. Okay, that's a very good question. So Black Cat is asking what the level of experience is based on, and that's a very good question. So some people just say that they are good traders, and people then believe it or not. So it's actually based on what people say. Okay. So the level of experience on our side, on Darwin. Okay. So we have a very sophisticated algorithm that evaluates how many independent trading decisions have been made to be able to say that someone has a long enough track record so that he would get a selling an evaluation. Those selling systems. Let me go through the thought process. Those are the questions that you're making are very good, but let me go through the thought process. I think you understand what I'm trying to get at. From the point of view of the trade leader, a trade leader is the only reason why he would credibly let others participate in his profits is if he has a strategy that can make more money than he owns. So if you have 50,000 euros and are making 30% per year with a strategy that could manage 2 million euros and you don't have those 2 million euros, then there's a genuine business case to be made whereby you ask copy traders for 1,950,000 euros. You manage those 2 million, so your 50,000 plus the rest for everyone, and then you get paid on the success, on the 30% that you have achieved on the 1,950,000, which you didn't own in the first place. And the only way people will believe that you are successful is if you ask to be paid through success fees, because if you make money, then they'll pay you. If you don't, they will not pay you. And why would you do that if you weren't confident that you were going to get paid? So that's the important setup that you have to go for. If it's a trade leader who doesn't have enough money to make what his strategy could be making. Now, the issue is for you to be able to do that in most jurisdictions, you need to be a regulated portfolio manager. And if you are not a regulated portfolio manager, you do not have the legal right to collect success fees. And in addition to that, we don't have a broker involved in here. So there's no way for people to actually place the trades. So here comes the third party that promotes most of the social trading sites. And that's, so to say, social trading broker. And as you know, all brokers make money on the volume for the transactions that they process. If in addition to it, it is a dealer or a broker dealer who market makes against customers, then in addition to the spread, they might collect the losses of their customers. And brokers, importantly, cannot collect success fees because they're not in that business. So what they collect are execution commissions. So what most people think of free social trading is a service where people, for instance, in eToro, the average spread on the euro dollar will be something like 3 pips or $300 on the million. You can go to brokers like Darwinex, which charge $50 on the million, plus 0.1 to 0.2 spread on the euro dollar. So there's a substantial markup in commissions. And coming back to the trade leader, the way that the trade leader gets paid, remember, the credible way for the trade leader was to get paid on success fees, but he cannot collect them, and the broker cannot collect them. Since the broker can collect commissions, what happens here is that the broker overcharges commissions to the copy traders and kicks back some of those commissions to the trade leader. And the big problem with this is that the investor or the copy trader who wanted profit is paying for someone via volume, not profit. And what happens in many cases then is that a lot of the leaderboards by these social trading brokers get filled up by strategies that do a lot of volume, presumably by doing a lot of trades and or with a lot of risk. You can, for a while, get lucky with a lot of trades with a lot of risk and make very high profits. So they make it to the top of the leaderboard ahead of people who are looking for long-term profits. So what happens is that the copy traders end up copying strategies which are not long-term profitable, which will eventually blow up, but because they make lots of trades with a lot of risk, they generate a lot of volume for the broker who advertises it because he's collecting on the commissions. And what happens here, obviously, is that the winners here would be for sure the broker, possibly the trade leader, depending on the commissions that they kick back to the trade leader, but the copy trader, okay, careful when they say trade-off and that's what you say. Okay. I don't really understand what you mean here. So what I'm saying is that there is a big incentive to generate lots of volume. And the only way to generate lots of volume is by either placing lots of trades or placing trades with high risk. And that is a fact. And so I am being quite careful when I say it. Does that answer your concern? I hope it does. Yeah, they get cuts and spreads. Yes, correct. So they get cuts and spreads, and the cuts and spreads is part of the volume. So the more volume there is. Oh, okay. So basically, the more volume, the more spread the broker collects, or the more commission. It depends on how they work, and that's what the trade leader is getting. But the issue here is that the trade leader is working for spread or commission or volume, and the copy trader wanted profit. So they're not going in the same direction, and that's the issue. So if you're coming into copy trading to thinking of sharing between equals, so if you say have a friend whom you respect and you both want to collaborate online to make profits together, you should always be a bit selfish and think, okay, am I contributing to my friend as much as he's contributing to me? And if not, well, maybe there's a problem, because why am I doing this in the first place? The other one is sometimes we have a tendency to think that others know better than us. And the fact is that trading is a very lonely occupation where you have to really fight yourself to find your own strategy. And sometimes there's no one other than you who can help you at doing it. And of course, even if you decide to exchange information with others, you should be doing it in a venue where people are not looking. So ideally, try not to use Twitter or those places, because as I just mentioned before, there are very smart people watching, and they might free ride on your cooperation without you getting anything for it. If you're actually looking at copying or mirror trading in a PAM service, so you should ask the following questions, because if the service does not meet these criteria, very likely the trade leaders are not very good at it. So the first one is the service legal? And does either the leader or the site hold the legal permissions to be offering mirror trading, which would be managing investments, or social trading, which would be providing investment advice? Does the IRS watch? That's a very good question. To the best of my knowledge, the tax authorities are not paying a lot of attention to this, but I agree with you, they might actually start watching. On a legal basis, whatever revenues you make from trading or social trading, it's up to you to declare those revenues. So the broker does not have that obligation. And okay, so let's go through the two steps at a time. So first point was on the whether tax authorities are watching. Is I can't know. Obviously, if people start making millions in mirror trading sites, then I'm pretty sure the tax authorities will watch. For the time being, I am not aware of anyone making millions. I would hope that people make millions at Darwinex, but for the time being, I think it's a small thing. So the risk that the tax authorities are watching your earnings, I think, is still low. And then someone has asked me on what a scalable strategy is. So, well, bear in mind that whenever you are placing a trade, if there are a bunch of millions following you, then those millions are going to, okay, so our spreads, you can check our spreads on LMAX Professional. To give you an idea, the average spread on the euro dollar is about 0.2 on average. So they are quite competitive. Now, Mano, your question about scalability. Okay, well, guys, I think we're, I'll be very happy to take individual questions relating to Darwinex maybe later, because that's actually outside the topic of the webinar, and Ethics Street, who have been kind enough to provide us with the platform, I will not be happy about it. So my email address I can put in here, and if you have any questions which are off topic, I'll be very, very happy to take those offline for you. So apologies for the questions that I can't answer today, but I'll be very happy to take them offline, as I mentioned. Okay, so so the legal issue was there. The next one is independent monitoring. So if there's no third party certifying the track record, for instance, like we do, yes, we can do questions after the presentations. I agree with that. So to be able to know whether something is legitimate, always ask for a third party to certify the track record. For instance, my ethics book does it, and I think, in my opinion, they are credible. Others also do it. I'm not so sure about the others. Then the compensation, very, very important. So if the trade leader is not getting paid on the basis of profits, at least partially, you should be very, very, very skeptical of that trade leader. So, because as I mentioned, the only rational reason why a trade leader would allow others to share in a profitable strategy is if he needs additional capital and wants to participate in the success fees. If he doesn't need that and agrees to just getting paid on compensation, then I think it's unlikely that you will get long-term profits out of that trade leader. Because, as I said, he's not aligned with your profit. So he's actually looking for volumes, not profits, and that's your problem as a follower. So when we look at alternative models, if you think of what we've covered so far, is we have described the brokers' incentives, and we have described the trade followers' incentives. But the important thing to understand is to think of the trade leaders' incentives, and that's the right way to approach this one. The first one is that, like, think if you were the world's best trader, or someone who really is making long-term profits, then you don't really need to take legal risk. So you will not choose to market your trading strategy in a place which is not legal. So always look for legal cover, because if you find trade leaders who sell stuff illegally, they are then very likely not good trade leaders. Second point is the alignment, as I mentioned. So do trade leaders get paid on profit or not? If they don't get paid on profit, then be very, very, very careful. Third point, and this is the most important one, and one which people do not appreciate, is whether traders are giving away the intellectual property. Now, let me think of an example such as eToro. So let's say there's Mal Solo, who's the top Spanish trade leader at eToro, who now just published that he's long the eurodollar. The eurodollar is the most liquid asset in the world. So if he really was in a position to make big bucks with his strategy, then that information, that if you know that the world's best trader has gone long the eurodollar, you've just found out through eToro, nothing stops you from opening that trade in another account with another broker who's much cheaper than the 3 pips at eToro, and placing that trade for maybe 20 million, and basically free riding on the Mal Solo strategy, because you're not paying him for it. So if the trade leaders agree to telling you real time what the trades are, then very likely that information is not as valuable as they claim it is. So if a trade leader or a hedge fund lets you know what they're doing real time, very likely it's not a good trade leader or a good hedge fund. And again, always ask for someone independent. So do not trust someone who says he's the best trader in the world. Rather trust someone independent from that trader who is saying that, because that is credible. The other thing isn't. Yes, they can say that. So, for instance, there's a very good question by FX Boyki. So, can they say that they are doing the opposite so that they can get out of a trade? Well, when you have so-called experts going to CNBC and they tell you, yeah, the dollar is hot right now. Well, again, you should question what incentives they have for going on TV and giving that information away for free. So, yes, unfortunately, that happens very often with these so-called experts. So, most of the time it's bullshit, and or maybe it's even worse than bullshit. They're actually looking to get out of a trade and fooling you into taking them out of it. So that is entirely possible. Yes. So what we think the right model to do all these things is to get a trader who wants to scale his investable profit. Manuel, the question here is let's say his strategy could manage 20 million and he's just got half. Then there is a genuine point to get from investors another 19 million so he can make money on 20 million, not just half, and get compensated on success fees. Now, someone like Darwinex, who's, go back one slide, okay? Is that okay, Boyki? Okay, going for the next one. So the genuinely good setup is one where instead of a broker, there's an asset manager who's doing this. And we independently rate the strategies for investor appeal on our site and manage the risk for the investors. We pay the trade leaders on success fees. And because we pay the trade leaders on success fees, our incentive is to charge a very low execution. So we charge $50 on the million round trip, which is 0.5 pips all in, precisely because if we charged higher execution, we would be stealing the success fees and the profits that accrue to the trader and the investor, and we would not be credible. So that's why we pay the trade leaders on profits and not on commissions. That's why we're regulated by the FCA. We hold the asset manager permission so that you can trade from home without holding it. And this is the most important one. This is why when you buy a strategy at Darwinex, we will not tell you real time what that strategy is doing. So we transform the traders into assets. So let's say FX Boyki is long the euro dollar and an investor is mirroring him. Then we would tell the investor you can buy the asset FX Boyki at 100, but there's no way on earth we will tell you that FX Boyki is long the euro dollar, because if you know that he's long the euro dollar, then you can steal his idea and go place that trade elsewhere without paying FX Boyki for it. So that's another way to see if things are credible. Okay, well, that was basically all I had to cover today. If you have any questions, I would be very, very happy to take them now, or maybe if we are out of time, I would be very happy to take your emails and go through them. So, can I summarize in 2 sentences? Yes. Social trading is potentially a very good thing because there are a lot of very good traders in the world, and there are a lot of investors who are looking for good traders. So in principle, it works. But you should always ask what everyone is getting out of it to make sure that you actually end up benefiting. Did that summarize it all? Well, MRCC. Yes, yes, to the best of my knowledge, all the webinars by FX Street are recorded. So you can ask the host to provide a link and you will be able to watch the entire recording. So yeah, don't worry if you were late. This will be available for you later. It's okay. Okay, guys. So there you go. That's where the recording will be. The very good traders. Okay, I'd like to think, go to Darwinex and we have a rating where we say who we think they are. We may not be right, but we are independent for them, so it is credible. Okay, guys, so take care and happy trading, everyone. Black Cat, please write to me, and we can take that offline. The definition of a good trader. We can take that offline. Okay. Take care. Bye bye.